Well, in this lesson, you learn about how intercompany transactions are recorded in Dynamics 365 Finance. Firstly, let's understand what constitutes an intercompany transaction. An intercompany transaction is basically a transaction between two legal entities within the same group. To better understand, let's take an example of Google Company or Google Group. Now, Google within itself will have hundreds or thousands of sub-entities or legal entities, and the financial results of all of them put together constitute the Google Group financials. Now, a transaction that happens between one Google legal entity and another Google legal entity is actually an intercompany transaction. Now that you have understood what is an intercompany transaction, let's understand the types of intercompany transactions that can exist. First is the goods or services being bought by one legal entity from another legal entity within the same financial group. The second type of intercompany transaction is not a sale or purchase between the two legal entities, but instead it is just an expense of one legal entity being paid by another legal entity. And it is this second type of intercompany transaction that we'll be covering in today's lesson. Now let's understand this better by assuming that there are two legal entities, USSI and GBSI. Now USSI is a US based entity and GBSI is a UK based entity, but both of these entities are within the same financial group. Now let's assume that a US employee travels across from the USSI company to conduct some meetings within UK and he visits the GBSI office. Now, while this US employee is in UK, all of his hotel expenses and food expenses that has been incurred are being in fact paid by GBSI. Now, if you understand this a little more closely, all of these expenses do not really belong to GBSI. So they're not really expenses or P&L items of GBSI. But in fact, these are expenses of the USSI company, which are being just paid by GBSI. Now let's take that example of that hotel booking for the US employee. At the end of his stay or at the beginning of his stay, the hotel will send an invoice to GBSI, but this is not an expense of GBSI, so it will not end up in the P&L of GBSI, but it's in fact an expense of USSI. So when GBSI is recording this transaction, they will need to book a payable to the hotel vendor because they need to pay for the invoice. But on the other side, the debit part, they do not really record it as an expense or P&L item. Instead, they will say that this is the money that is due to be received from USSI. On the flip side, or in the books of USSI, they will record that hotel expenses as an expense in their P&L. But on the credit side, they do not really select the hotel vendor as the vendor that they need to pay the invoice for. Instead, they will say, this is an amount which we need to pay back to GBSI as an intercompany transaction. If you look in the books of GBSI, that the debit needs to go to USSI intercompany and the credit is the hotel vendor. Whereas in the books of USSI, they will record the debit part as an expense, and in the credit, instead of the hotel vendor, they will select GBSI because GBSI has already paid the hotel vendor. So what D365 Finance does is that since USSI and GBSI will be two separate legal entities, both within Dynamics 365 Finance, it does the recording of the intercompany transaction as an automatic posting. So it does not require that when GBSI books an invoice in their own books, a separate transaction need not be recorded by USSI in their own books, because the original hotel invoice booking against the hotel vendor will end up posting the transaction in USSI as well. So let's now jump into the application and you can see as to how this entire process can be automated and the automatic posting works within Dynamics 365 Finance. So the first setup that we'll have to do for this intercompany transaction is the intercompany posting setup. And this you can see under General Ledger, Under posting setup, there is intercompany accounting. Clearly, there are a lot of relationships between multiple legal entities out here. So the one that I'm interested in is USSI and GBSI. So in the books of USSI, the debit account that will be used is 133,100, which is intercompany receivable GBSI. Similarly, there is a credit account to be used, which is 231350, and that is intercompany payable GBSI. And in the books of GBSI, you will have a similar intercompany receivable and an intercompany payable. Now what you see on the screen is the same ledger account that has been mapped in both legal entities, but these accounts can in fact be different, and you could have different intercompany receivable GBSI and a different intercompany receivable USSI. Now with this setup being there, let's go ahead and record that hotel vendor invoice that we spoke of earlier. So to do this, I'm going to go across into my accounts payable and book my vendor invoice. So I'm going to choose invoice journal. So I'm going to click new and select a vendor invoice. Give in a description and click on the lines button. So the US employee who came across to GBSI to visit and have the meetings has stayed in a hotel, and that hotel vendor invoice is what we are entering right now. So in my case, I'll just select one vendor. Give an invoice date. Given an invoice number. Given a description for the transaction. An amount of the invoice. And out here in the offset account, the normal course is that when you're booking a invoice for GBSI, the offset also will belong to GBSI. But in this case, the offset is not an expense of GBSI, but in fact it's an expense of USSI. So to book this kind of intercompany transaction, I'm going to go across into the General tab. And in my offset company, I'll select USSI. And under the ledger, I will say this is travel expenses or hotel expenses. Let me see if there is travel. There is travel expense 601,500. And it is asking me to select financial dimensions. So for my credit, I have selected GBSI, and for my debit, I have basically selected the intercompany USSI legal entity, which will turn this normal vendor invoice transaction into an intercompany transaction. So I'll go ahead and validate it. It says the journal is okay. And now I'll go ahead and post it. So if I click on the voucher, I can see that the credit part is going to accounts payable because I still need to pay that hotel vendor for 1,500. But the debit part is not going as an expense for GBSI P&L, but instead it is showing up as intercompany receivable USSI. So now if I log into the books of USSI, I should see a similar entry on the other side in travel expense account. go across into the trial balance. And if I go across into the travel expenses account, I can see the transaction which was there, which came across from GBSI, is showing up in USSI as well. If I click the voucher, I can see the 1500 as a debit to travel expenses, and the credit part is showing intercompany payable GBSI 231350. So as you can see, this process of recording the intercompany transaction within Dynamics 365 automates the second part of the intercompany transaction. So I had recorded an invoice in GBSI which recorded or which posted an automatic entry in the books of USSI as well. So instead of two companies recording two separate transactions, we now have a process by which the original transaction, when it is recorded in the first legal entity, automatically posts a transaction with the right posting intercompany accounts in the other legal entity.